Hello, this is JC De Guzman for our top 5 gainers and top 5 losers analysis for May 20, 2019. And the 10 stocks that I'm going to talk about today are BRN, Manila Bulletin, ACE, DMC, APC, PRMX, VITA, Food, OPM, and Chelsea. I will give you my technical analysis followed by my overall sentiment and recommended plans of actions. And I will begin with BRN. BRN closed on Monday at 0.78. Support is at 0.71. It's at the brink of crossing over or crossing above its resistance at 0.78. Should it break above rather 0.78, that will make 0.82 as its next resistance level, followed by 0.86. Let's take a look at MACD. MACD is not yet confirmed that it's not yet moving above the signal line, but we clearly see a formation of a bullish convergence between MACD and the signal line as well. And RSI has already bent its last line from the southward going to the northward direction already. On my DMI histogram, I'm seeing a clear uh, crossover of the positive DMI over the negative DMI in favor of the bulls. And volume also supported the green candlestick on Monday by registering a volume that's way higher than its 10-day volume average. So in the short term, clearly, I'm seeing a bullish sentiment coming from these indicators in the short-term scale. But on the long-term scale, as we can see that the last candlestick still moving below the 200-day SMA, which can be considered as an indicator of the stock's bullishness or bearishness in the long-term scale on the daily chart. I would say that BRN is bullish in the short term but bearish still in the long term. Okay, let's see. How about the foreign investors' participation? No, there's not much that we can derive, that we can factor in from the foreign investors' sentiment on BRN. So apparently BRN translated 0.71 as its rebound zone last week, right? So if you don't have BRN, I think our MACD, although our 10 although the conditions for our 10 SMA and MACD combo are yet to be confirmed, I think the four criteria that we always check have already been met. And what are those four criteria? They are in our quick start guide. And just a quick brush up, what are those for? The last candlestick must be green, that's number one. Number two, the last price specifically should be higher than the VWAP, which is correct in this case. Number three, volume should be a green one, that is higher than the 50% of the stock's 10-day volume average, which is true in this case. And for the trade and volume distribution, it should be closer, the dominant range should be closer to the intraday high than the intraday low, which is also the case for BRN. If you need to request for the stock's recent trade and volume distribution chart, please post that request in our private clients forum. But in the short term, I'm bullish on BRN. If you don't have the stock and you would like to do a test buy, you can do it within the dominant range based on your trade and volume distribution chart or analysis, which you can also request in our private clients forum if you don't know how to do your own trade and volume distribution analysis yet. Okay, now if you have had BRN, let's say you bought it near 0.70, then good job. I think you were able to preempt the conditions of our 10 SMA and MACD combo. All you have to do now is to either hold your position or you top up within the dominant range and then sell once your trailing stop loss has been hit or is hit. You can also preempt your trailing stop loss. What does preempting the trailing stop loss mean? It means selling earlier than your trailing stop loss. Earlier than your trailing stop loss whenever the four criteria that we always check are starting to be absent one by one. Those who attended my advanced seminars, this is mentioned, written, highlighted in the handouts that I gave you. So please brush up on those handouts as well. Alright, so next in the list, we have Manila Bulletin. Manila Bulletin closed at 0.56 on Monday. Support is at 0.52. Resistance is at 0.72. It managed to recover its position above the 10 SMA. But let's check if MACD is already above the signal line. No, not yet, but I am seeing a formation of a bullish convergence between the MACD and the signal lines. There's also not much that we can derive from the foreign investors because MB is not open to foreign investors. On the DMI, I'm seeing that the bulls have taken over already. However, the upward momentum is not yet on the very strong category yet. Okay, so now the DMI, I've mentioned that already. Let's see. It's a green candlestick. It closed above. It's not above, but it's equal to its VWAP, and volume is bullish. And I'm not yet 100% bullish on MB because it did not close higher than its VWAP on Monday. Okay, but if you would like to, you can do a test buy within the dominant range as well, or maybe at between 0.55 to 0.56. Okay, you can do a test buy. Your resistance is at 0.72. Make sure that you calculate your reward to risk ratio before you do a test buy. For the new subscribers and for those who have heard the word trailing stop loss or the word to risk ratio for the first time, please brush up on your knowledge on these two terminologies by going back to our quick start guide, and pretty please read the quick start guide from the very first page, from the very first letter to the very last punctuation mark. Okay, read it cover to cover. Do it 3 times or 5 times if you must, just like what I do. Sometimes I have to read what I'm reading maybe about 3 to 4 times for me to get a good idea of what I'm reading. Okay, so there you go. So I am bullish on MB in the short term, but I'm bearish. I'm bullish in the short term, but still bearish on in the long term. So just be cautious whenever you do a test buy on Manila Bulletin. Uh, the the thing that we're trying to do here is not to be, yes, we would like to be right all the time, but there will be cases when the market will prove us wrong, because sometimes no matter how much data that you have used to derive your bullish sentiment, sometimes the market does not care, no matter how data oriented you are. The market does not care that I have 19 years of experience going in and out of the stock market, Philippine stock market specifically. It does not care about my experience. We have to adjust. We have to immediately do some adjustments in our trade setups, in our plans, depending on what we see in the market. We have to react based on what we see and not what we want to happen. Okay? So do a test buy, but make sure that your trailing stop loss in your mind is already set properly on what you should do should the market or should Manila Bulletin decide to change its direction from the northward going back to the southward direction. And always decide based on your own investment horizon and risk tolerance. That's very, very important. Okay, so just mix and match the help that you're getting from me based on your due diligence. So we have a 50-50 role here. 50% you're outsourcing analysis and second opinion or maybe insights to me. You're outsourcing that to me. Then the 50% of the work should be based on your due diligence according to your investment horizon and risk tolerance. The pronoun that I've used was your, not JC De Guzman's investment horizon, not JC De Guzman's risk tolerance. Okay? Because whether you like it or not, my sentiment or my own investment horizon risk tolerance are, uh, by a certain degree, affect the overall sentiment that I'm giving you. Okay? We can't prevent that. We can't help that. Okay? It's part of the process and analysis. Now, next stock in the list we have ACE. So A site closed at 1.36, support is at 1.23, resistance is at 1.37. This one is also at the brink of crossing above its resistance, and when that happens, it will make 1.46 as its next resistance level. I'm quite concerned about its volume because there's some flimsiness, so to say, or thinness on the volume that I see on the volume histogram of A's. Nonetheless, our 10 SMA and MACD combo, the conditions have already been met. And on the DMI histogram, it shows here that the bulls have taken over. However, there is a however. However, the upward momentum is not yet, it has not touched the very strong category yet. So take note of that. So reward to risk ratio, if you are happy with your reward to risk ratio, then do a test buy within the dominant range. Okay? If you don't know how to do your own trade and volume distribution analysis, please post a request in our private clients forum. Okay? I'm also not 100% bullish on Ace based on what I see on the volume. Nonetheless, it closed above its VWAP on Monday. The VWAP on Monday was at 1.35. Next stock in the list, we have DMC. DMC closed on Monday at 10.42. Support is at 9.7. Resistance is near 11.15. Okay, I think I have updated. I have updated already the ratings that I have for DMC in the long term. By the way, listeners, this video and everything that you're hearing right now is meant for short-term trading. Okay, my insights, my analysis is geared towards, made for short-term traders, not long-term investors. If you're a long-term investor on DMC, exit this video. Go to our long investment guide for long-term investors. That's where you will find the advice that fits your investment horizon as a long-term investor for DMC. But this one's for short-term trading. Now going back, I'm still seeing a perfect bearish alignment among the SMAs of DMC. However, I think it already managed to cross above, or not yet above. It has just kissed the 10 SMA but not yet over it or above it. So nonetheless, we would like to see a sustainability on the ascent in price of DMC with volume, if possible, or ideally speaking. Okay, on the MACD is not yet above. It's not yet moving above the signal line, but I'm seeing a bullish formation, a formation of a bullish convergence between MACD and the signal lines. But I think MACD will only cross above the signal line once the price is super close to the resistance at 11.15. On my DMI histogram, the bulls have not taken over yet. That's why I prefer to see DMC going super close, if not beyond or above 11.15. When that happens, the perfect bearish alignment of the SMAs may start to be broken when that happens. So let's see. On the other hand, foreign investors have continued their bearish selling sentiment, their bearish appetite or stance for DMC because they sold about 54 million pesos worth of shares on Monday, and they have been selling. Let me give you an updated count. They have been selling DMC consistently for 26 trading days, not calendar days. So that's more or less over a month worth of trading. Okay, take note of that. Okay, foreign investors have been throwing up DMC for the past 26 trading days. My overall sentiment on DMC in the short term is already bullish, and I am only looking at the range between 9.70 and 11.15. So if you are like me who is bullish in the short term for DMC, before you enter a new position, I suggest you calculate your reward to risk ratio first. Also, I suggest that you take these two items into consideration. Number one, the conditions of our 10 SMA and MACD combo have not been met yet. So, will you go? Is it a go or no go for you by considering that? Number two, foreign investors are not yet done throwing up on DMC shares. Is it a go or no go decision for you? So only you can answer that based on your own investment horizon and risk tolerance. Okay, should you decide to do a test buy again, and again, do it within the dominant range. And how will you know the dominant range? You do your own trade and volume distribution analysis. What if you don't know how to do that? Well, that's the reason why we have private clients forum. Just post a request and I'll give you my insights about its trade and volume distribution. All right. So there you go for DMC. Next one we have APC. APC closed on Monday at 0.425. Support is near 0.394, 0.395. Resistance is near 0.439 or 0.44. MACD has just continued its movement above the signal line, and it has been moving above the signal line since May 15, 2019. On my DMI histogram, the ball is still in the court of the bulls, but the upward momentum is not yet within the very strong category yet. Not yet. Okay, not yet. Besides, I'm seeing a perfect bearish alignment among the three SMAs of APC. Nonetheless, APC is already moving above the 10 SMA and the 50 SMA. So, technically speaking, on the daily chart, APC is bullish in the short term to medium term but bearish in the long term. It can only be bullish in the long term once it crosses above 0.44. And that can only happen with a strong forecast or with a bullish forecast if APC will continue to register green candlesticks on a daily basis, preferably and should be, with a volume that is higher than the 50% of its 10-day volume average, and if possible, equal if not higher than the 10-day volume average itself. Okay, so not just above 50%, but if possible above the 10-day volume average still. 10-day volume average, the entire thing. Okay, above the 100% of the 10-day volume average, in short. Okay, so I'm quite concerned, by the way. I have some hesitations on APC because of some flimsiness on the volume. I don't see a steady, let's use that word, a steady fluctuation on its volume. I don't see any regular, I see some irregularities on the size of the daily volumes of APC. So if you're asking me if I am personally interested in trading APC, I think I would rather choose some other stocks to trade, but not APC for now. But that sentiment is based on my risk tolerance. Okay, we all have our own risk tolerance levels. So consider what I said, but at the end of the day, use your own risk tolerance and investment horizon as the final benchmarks for your go or no go decisions. Okay, so personally I'm not that confident to trade APC because of those irregularities that I see on its volume histogram. Besides, the upward momentum is not yet on a strong category level yet, so there's still a chance for APC to just trade the range and not register a trend. Okay, it's range versus trend. I find it quite boring to trade ranges. I'd like to trade trends instead. Okay, that's based on my investment horizon again. That what I've just said is based on my investment horizon. Okay. Next stock in the list we have PRMX. PRMX closed on Monday at 1.99. Resistance is near 2.39. I had to plot a down Fibonacci diagram to find the psychological support for PRMX. So should this throwing up of traders on PRMX continue, we might see the stock at 1.43. That's in confluence with the 61.8% of the down Fibonacci extension. Okay, 1.43. I see no signs of any bullish convergence happening among the indicators. However, RSI is about to kiss the classical oversold level of PRMX. So let's see if PRMX will translate 1.95 to 2 peso per share as a possible rebound zone. I don't see some signs of exhaustion yet because as of Monday, uh, the red candlestick came with a tall bearish volume bar. So I don't see some signs of exhaustion yet. Okay, in fact, the downward momentum is still on a very strong category. It's still on a very strong category. Okay, take note of that. So be on a watch and see mode for PRMX if you like the stock. And by the past performance of PRMX, by now your trailing stop loss should have already been hit. So I'm not going to give any piece of advice for those who may still have PRMX. Because if you're still holding on to your PRMX right now and you bought it above 2.5, then one thing's for sure, you did not respect or set up your trailing stop loss before you traded the stock. Okay, all right, so don't trade PRMX yet for short. In short, next one we have VITA. VITA closed at 1.12 on Monday. Resistance is near 1.36. I also had to plot a down Fibonacci diagram or chart to find where the 61.8% down Fibonacci extension is, and that is near 0.73, and that one also acts as VITA's psychological support. It's quite distant from its last price of 1.12, FYI. I also do not see any formation of a bullish convergence among the indicators. However, RSI has just touched its classical oversold territory based on my parameters. So let's see if VITA will translate 1 peso to 1.12 as a possible rebound zone. Nonetheless, as similar to the previous chart that we discussed, I don't see any signs of exhaustion yet. In fact, it seems that the appetite to continue selling VITA seems to be still on a strong level. Based on what? Based on the volume. Okay, I'm not seeing any. It seems that those decided sellers are not stepping up on the brake pedal yet. Okay, so be on watch and see mode as well on VITA. Look for signs of exhaustions. And what are those signs? Look for the presence of the 4 points that we always check. Green candlestick, price above the VWAP, bullish volume bar, the dominant range is closer to the intraday high than intraday low. These are the 4 things that I have kept on repeating almost every single day in this video. So by now you should have already memorized these 4 points. Yes? Well, if you are listening to the videos every single day as well. So I'm bearish on VITA. Don't touch VITA yet. Okay, don't trade it yet. Food closed on Monday at 0.67. Resistance, it just broke below its previous resistance at 0.72. So its new support now is at 0.53. This is still a historical support, not yet a psychological support. Okay. Now let's see. Volume is still bearish. It's still quite sizable. MACD is still busy moving below the signal line, still bearish. There are no signs of any formation of a bullish convergence among all these indicators. However, RSI is already super close to its classical oversold level. We will see if food will consider 0.65 to 0.67 as a possible rebound zone. Let's see. Okay, let's see. On the DMI histogram, consider this. The downward. The downward momentum is still on a very strong category. If this were a storm, I think this is still a super typhoon, so to speak. Okay, so consider that. Consider the strength of the downward momentum in your go or no-go decision. And my overall piece of advice, since I'm bearish on food, is to stay on the sidelines, just watch food for now and wait for the appearances of those four signs that we want to see if we are to do a test buy on any stock. Okay? Second to the last, we have OPM. I have decided to include this stock in my videos, even though I'm not interested to trade the name with this kind of price fluctuations. Well, just for educational purposes only. OPM closed on Monday at 0.0110. Okay, and that's the exact same support level as well. Resistance is near 0.0120. And because there are some irregularities, obvious irregularities on its volume histogram, that makes me all the more uninterested to trade the name OPM. I don't see any signs of reversals yet among the oscillators that I'm using, even though the positive DMI is hovering the negative DMI. My conviction is not yet that high. My bullish conviction for OPM is not yet that high given the irregularities that I'm seeing on the volume. So sometimes when there's some flimsiness or irregularities on the volume histogram, it trumps everything. It trumps all the bullishness or bearishness that I'm seeing on my other indicators whenever I see some problems on the volume histogram. So I really have a huge bias on the picture, on the volumes picture of any stock, if you have noticed that already. Okay, so there you go. Disclaimer or disclosure, I'm not interested to trade OPM, especially stocks with this kind of price fluctuations. Okay, I don't like trading stocks that are fluctuating between 0.001, that kind of very low fluctuations. I'm not interested to trade those kinds of stocks. I feel that they're not worth my time. Okay. Last stock in the list, we have Chelsea. Chelsea closed on Monday at 5.96. I think it's trying to go back below. Well, it's not trying because it's already below the 10 SMA. The 10 SMA was at 5.95. It's already at 5.96. 10 SMA is at 5.9. Let me see. Oh, not 5.95, but 5.98. That's the place of the 10 SMA. So, meaning to say Chelsea is already below the 10 SMA. Bearish on the volume last Monday was super bearish. It moved higher than its 10-day volume average. MACD remains above the signal line. However, that descent in price on Monday also made DMI to bend towards a southward direction. Well, that's a formation of a bearish convergence with the signal line. That's quite expected because Chelsea had been moving upwards for over a week, and then a tall red candlestick was registered. So, as an expected result, we would see the last line of the MACD line to bend towards the southward direction. Same thing with the other indicators that are relying on historical price movements such as RSI, historical volatility, and DMI. Okay. Anyhow, RSI approach, although it did not kiss or it did not cross above its classical overbought level, it drew closer to the classical overbought level last week. So apparently, Chelsea translated 6.4 as a selling zone. So perhaps those who caught Chelsea close to 5 peso per share decided to lock in their profits at 6.4 or near that level. If you are one of those guys who bought Chelsea close to 5 peso per share when our 10 SMA and MACD combo, when the conditions for our 10 SMA and MACD combo were met, congratulations. It only proves that our 10 SMA and MACD combo works. Not 100% of the time, but percentage-wise most of the time. Okay? So you should have already locked in your profits, and if you already did, and now thinking again if you should enter a new position, I suggest don't rush. Don't enter a new position just yet. And this piece of advice also applies to those who have never had Chelsea but are planning to see if they can trade if they can trade the name, if Chelsea is still a tradable stock. So not yet. Wait for some signs of exhaustion. Wait for the bears to ask for water as a sign of exhaustion, so to speak. Okay, so you've heard my technical analysis, overall sentiment, and recommendations for these 10 stocks. Again, my name is JC De Guzman. Have a disciplined, profitable, and a data-driven trading day ahead. Bye for now.